lot of people want to look at, and that's the NIMs as well. Look, you know, for CEOs in a row, you've had some pretty good NIMs compared with some of your oppo in Great Britain and elsewhere as well. Now expected to be less than 3.2%, with a current view of around 3.15%. I'm interested, is this self-inflicted, i.e. you're going to increase the deposit rates because of the political pressure, or actually is it the commercial pressures that is driving the diminishment of that, what was previously quite a fat NIM figure?
Yeah. So it's actually a little bit of both, but it's more something that's different from that, which speaks to the quality of our client base. So first of all, our UK NIM, the thing that you're quoting coming down from above 320 to 315, is just a quarter of our total NIM. So while we are a very important major high street bank in the UK, we differ from the rest of them in the sense that we've got this large global investment bank. So the UK NIM, which we've dropped our estimates on, is only a quarter of the total. Why has it dropped? It's dropped for a couple of the reasons you've said, which is increased pass-through on deposits and so on, which we think is right to support society. But another part has then that we've been seeing increasingly people who are responding to higher inflation, higher interest rates on their mortgages, use their savings to pay down their mortgages. I think this speaks to two things. One, it speaks on the part of our customers to their own prudent financial management. That's what they should do, right? When they're paying higher interest rates, if they feel comfortable using their savings, they should use them to pay it down. Second, it speaks to the quality of our customers. We have generally been very conservative in our lending guidelines, and we have a set of customers on margin who are able to do this. And so what you see as a drop in NIM equally is a benefit for us downstream, because it will reduce our impairment risk. And that's what I mean by the balance, right? We run a balanced business. We run a high-quality business. We want to make NIM for sure, but we also want to make the right kind of NIM with the right kind of credit risk. And you're seeing that play out in the numbers.
Venkat, I get it when people want to put their savings down, their mortgage rate's gone through the roof. What I do worry about is when they use their savings to pay their utility bills as well. And I say that in relation to the fact that your credit impairment charges have gone up aggressively to £896 million versus a year ago of £341 million. Is the UK consumer, do you think the consumer more generally is creaking?
No, so actually, we've got to look at our statutory results, and our credit impairment is fairly in line with what our expectations are. The UK consumer, in my opinion, or in our opinion, is worried, is prudent, but is not under stress. Now, we've got to be watchful, and we've got to give them all the help we can, which is what we are doing in mortgages by allowing them to move to interest-only mortgages. We're allowing them to extend terms. We're allowing them to, if they're coming up to a mortgage maturity, to refinance 6 months early. And in fact, many are doing it with us on our own apps. We're also passing them greater amounts in savings. And in fact, we increased our instant access everyday savers, as we call them, by about 50 basis points 2 weeks ago. So we're doing all the things to help. We see signs of prudent financial management. We don't see signs of stress, and long may that continue.